Okay, so let's just get right to it. Bitcoin has absolutely smashed its all-time high. But this isn't just your typical crypto rally. In this explainer, we're going to break down the surprising forces that are really driving this surge, from political drama in Washington to some very calculated moves by billion-dollar investors. All right, let's dive in. Just look at that number, over $125,000. We're not just talking about a new record here. This feels like a whole new chapter for Bitcoin. And get this, the total market cap, the value of all Bitcoin out there, it's now a mind-boggling $2.5 trillion. That has literally never happened before. So you got to be asking, what on earth is causing this explosion? Well, part of the answer might actually surprise you. It has a lot to do with the chaos happening in Washington. So here's an interesting take from Fabian Dorey over at Sygnum Bank. He's basically saying that the whole US government shutdown thing, well, it was a major wake-up call for investors. When you see traditional systems start to sputter, people naturally look for alternatives. And that's where decentralized assets like Bitcoin come in. It's like a flight to safety, but for the digital age.
So the bottom line here is pretty simple, right? The more chaotic politics get, the more people seem to be drawn to Bitcoin. It's becoming this hedge against all that uncertainty.
But politics isn't the whole story, not by a long shot. To really get what's happening, we need to look under the hood of the crypto market itself, because there's a lot going on behind the scenes. Okay, so there's this term you'll hear analysts throwing around, accumulation phase. What does that even mean? Well, think of it like this. It's the quiet period before a potential storm. It's when the really big players, the whales, are quietly buying up tons of Bitcoin. They're looking at all this political mess, seeing the market calming down and thinking, aha, this is the perfect time to buy, before the rest of the world catches on. And look, this isn't just some theory. The evidence is right there in the public data. So first off, the long-term holders. The real diehards, they've pretty much stopped selling. They're holding on. Next, you've got the short-term traders. They're not panic selling anymore, which is a great sign of confidence. And the really risky speculative bets, those are cooling off. And to top it all off, a bunch of those bets got cleared out recently, kind of like hitting a reset button for the market. When you put it all together, it paints a picture of a market building a really strong foundation. So, does this mean it's all green lights and rocket ships from here? Well, hold on a second. This is crypto, after all. There's always another side to the story, and some folks are definitely pumping the brakes. Take Jay Kennis from Nansen, for example. He's saying, hey, let's not get ahead of ourselves. He thinks it's way too early to declare that the bottom is in. He's worried this could be what's called a bull trap, where the price shoots up just enough to suck in hopeful buyers right before it falls again. For him, the real proof will be if Bitcoin can hang out at these new levels for a few weeks. That would show some real stability, not just a flash in the pan. So basically, you've got two main schools of thought right now. On one side, you have the bulls. They're looking at the political situation, they see the big money moving in, and they're convinced this is the start of the next massive run. But on the other side, you've got the more cautious crowd. They're saying, wait a minute, the real puppet master here is the US Federal Reserve. They argue that if the Fed decides to keep interest rates high, that could suck money right out of assets like Bitcoin. They're waiting for a clearer signal before they're convinced this rally's for real. Okay, so with all that in mind, where do we go from here? If the bulls are right, and this rally really does have legs, things could get, well, pretty wild. Let's talk about the numbers people are throwing around. All right, so the magic number everyone is watching right now is $120,000. Seriously, burn that number into your brain. Think of it as the new floor. If Bitcoin can consistently stay above that level, it's a huge psychological win. It tells the entire market that this isn't a fluke, and it could be the launch pad for something even bigger. And that brings us to the big headline-grabbing number. If this momentum keeps up, some analysts are actually calling for $150,000 Bitcoin by the end of 2025. I mean, just think about that for a second. That's not just a new record. That's a total game changer. So we got to ask the big question here. Are we watching Bitcoin finally mature into a serious global asset that's tied to real-world events? Or is this just, another classic crypto roller coaster, all hype and speculation? Honestly, nobody knows for sure. But one thing's guaranteed, it is not going to be boring. We're all in for a wild ride. All right, so today we're doing something a little different. We're not diving into some dense, complicated report. Instead, we're going to put just one single, really powerful financial headline right under the microscope. It promises something huge, some explosive news, but what's really going on? Let's get into it. Check this out. This is the headline we're talking about. Perfect storm. Bitcoin suddenly braced for a massive price shock after surging to all-time high over $125,000. Whoa, I mean, that's a lot, right? Every single word in there is doing some heavy lifting. Perfect storm, suddenly, massive shock. This language is it's perfectly crafted to make you feel a sense of urgency, to make you click that link, like right now.
You know, with a headline that intense, you'd expect something major, a real bombshell, maybe some secret insider info, a groundbreaking new analysis, a government announcement that's about to rock the entire crypto world. What could possibly justify a warning that sounds that serious? And the answer is, well, absolutely nothing. Seriously, the article behind this apocalyptic headline, there is no article. It's just a page with a bunch of links and some generic text. There's no new information, no secret analysis, no bombshell reveal whatsoever.
And this, right here, is where our real analysis begins. Because the fact that there's no story is the story. We're not just looking at lazy journalism here, we're looking at a masterclass in media manipulation. And the biggest takeaway is this. The headline isn't summarizing the news, the headline is the product that's being sold to you. So how do you even build a headline that's this powerful and at the same time this completely empty? Well, it's not random, that's for sure. It's a formula. So let's break down the 3 key ingredients that make this whole thing work so well. We're going to look at 3 specific tools they're using here. First, there's a really powerful metaphor to kind of set the scene. Then, you've got these emotionally charged words to get a reaction out of you. And finally, a very specific number to make the whole fantasy feel just a little bit more real. So, first up is the metaphor, perfect storm. I mean, this phrase is just brilliant because it immediately makes you think of all these powerful, uncontrollable, kind of destructive forces all coming together at once. It creates this huge sense of awe and inevitability without ever having to name a single specific reason why. It's all vibe, zero substance. Okay, next up, the emotion. The writer doesn't use boring terms like price volatility or market correction. No way. They go straight for massive price shock. These words are pure adrenaline. Massive makes it feel huge, and shock literally triggers our fight or flight response. It's designed to completely bypass your logical brain and hit you right in the gut. And finally, we've got the anchor. Why didn't they just say a new all-time high? Because saying over $125,000 feels so precise. It's this clever psychological trick. By giving you a very specific, very large number, the author makes their wild prediction feel like it's based on research, like it's concrete, even though it's pretty much pulled out of thin air. It anchors your expectations to their number. So that brings us to the really big question, right? Why go through all this trouble to craft the perfect headline for an article that literally says nothing? Well, it's because in today's world, your attention is the real currency. And a headline like this, it's basically a money printing machine. See, the goal isn't to inform you. It's to make you click. It's that simple. Every single click generates ad revenue. All those dramatic keywords help it show up higher in search results. And maybe most importantly, especially in a market like crypto, it creates this incredibly powerful feeling of FOMO, the fear of missing out. You know that feeling, right? FOMO is that nagging anxiety that everyone else is getting in on a secret or getting rich, and you're the one being left behind. Headlines like this are basically engineered to poke at that exact feeling. It pushes you to click, to share, to trade, to do something, to react, before you've even had a chance to stop and think. Okay, so now that we know how these headlines are built and why they exist, what can we actually do about it? Let's put together a simple 3-step toolkit you can use to disarm pretty much any clickbait headline that comes your way. This is how you can start reading the news like a critical thinker. It's really this simple. Step 1, always read past the headline. Just treat it like a sales pitch, not a summary of the facts. Step 2, look for that emotional language. Ask yourself, are these words designed to make me feel scared or excited or maybe angry? And step 3, Ask the most important question. What is the goal here? Is it to actually inform me, or is it just to get my click? So I think the key takeaway here is this. A lot of headlines aren't really selling information, they're selling an emotion. They package up fear and greed and curiosity into one neat little sentence that is designed purely for you to react to. So the next time a headline tries to sell you a feeling, what will you choose to buy into? All right, let's talk about a trend bubbling up in the corporate world that has some of the biggest names in finance sounding a major alarm. They're calling it a leveraged crypto time bomb. We're going to figure out exactly what that means. The headline right there. Bankers are seeing a ticking time bomb. And this isn't really about whether you're bullish or bearish on crypto. No, according to the insiders, there's a very specific, kind of structural risk that's building up, and it's got them really worried. So what is this time bomb? We're going to break down what it is, just how big it's getting, and most importantly, why some experts think it could send a shockwave through the entire digital asset market. Okay, the heart of the issue is this trend called Bitcoin Treasuries. Now, on the surface, it sounds simple enough. It's just companies holding Bitcoin. But the real story, the part that's raising all the red flags, is how they're getting it. And that's what's creating what experts are calling a potential systemic risk. So let's be super clear on what we're talking about. A corporate Bitcoin treasury isn't just a company dabbling in crypto. This is when a company makes a strategic decision to hold Bitcoin as a major reserve asset right on its balance sheet, kind of like how they'd hold cash or bonds. And crucially, they're often doing it by taking on debt or issuing new stock. And believe me, this is not some tiny niche strategy anymore. We're talking about a full-blown boom. Let's actually look at the numbers, because they really tell the story of just how big this has gotten. That's the number. Around 190 publicly listed companies have jumped on this bandwagon. And to be clear, we're not just talking about a couple of tech startups. This is a pretty significant corporate movement, and it's still growing. And this number? Well, that's the total amount of Bitcoin those companies are holding. Over 1 million Bitcoin. You know, depending on the price on any given day, we are talking about tens of billions of dollars, all concentrated in this new, and let's face it, very volatile corporate asset. And this isn't just a Silicon Valley thing either. It's truly a global trend. We're seeing companies from major financial hubs all over the world. The US, the UK, Canada, Japan, Hong Kong, they're all getting in on this. Okay, so lots of companies are buying lots of Bitcoin. Big deal, right? Why is that a time bomb? Well, the secret ingredient here, the danger, isn't in what they're buying. It's in how they're paying for it. This is where leverage enters the picture, and it changes everything. And this is the point that you really gotta get. A lot of these companies aren't just using spare cash they have lying around. Nope. They are actively raising money, either by selling off pieces of their company or by taking out loans specifically to buy a highly volatile asset. That is the classic definition of leverage, and it's a recipe for amplifying both your wins and, way more importantly, your losses. Let's make this really simple. Look, if you buy Bitcoin with your own savings and the price tanks, you lose your own money. It hurts for sure, but the risk pretty much stops with you. But when a public company uses debt to buy it, a price drop isn't just a loss on paper. It can threaten the entire financial health of the company. And that's when the risk starts to spill over and create stress for the entire market. This whole spillover effect can kickstart something analysts are calling a dangerous feedback loop. So let's walk through exactly how that would play out step by step. Okay, so picture this. Step 1, the price of Bitcoin takes a big, sudden dive. For these companies that are loaded up with debt, their assets just plummeted in value, but their debts, those are still the same. So to avoid going under, they might be forced to sell their Bitcoin. But here's the real kicker. When a bunch of huge companies all start dumping massive amounts of Bitcoin at the same time, it just floods the market, which pushes the price down even more. Which, you guessed it, puts other companies under pressure, forcing them to sell too. And that's the loop. That's the vicious cycle that can amplify a normal market correction into a full-blown crisis. That's what people mean when they say systemic risk. It's the idea that the failure of a few players can set off a chain reaction that threatens the stability of the whole system. So what does this all mean in the real world? Beyond the charts and the numbers, what is actually at stake for these companies and for the market as a whole? This quote from the CEO of Nickel Digital really hits the nail on the head. You know, we hear so much talk about crypto regulation, but he's arguing that the more immediate, the more urgent threat is much simpler. It's just the basic financial health of these companies. Can they actually survive if their main reserve asset takes a nosedive? So let's break that down because it gets a little weird. You can get into this bizarre situation where a company's Bitcoin holdings are worth more than the company's entire stock market value. If that happens, why would anyone buy new shares to fund the company? You could just buy the Bitcoin yourself for cheaper. So this completely chokes off their ability to grow. It puts them in that danger zone where they might be forced to sell, and it makes them a perfect target for a takeover. Basically, their own strategy backfires and traps them. Which of course leaves us with the big question. Are we watching a visionary move here, with companies cleverly hedging against inflation and building a treasury for the future? Or are we watching them build a financial house of cards, just waiting for a strong gust of wind to knock it all down? The answer, whatever it is probably going to define the next chapter for the entire crypto market.